I'm very, very pleased to have my fellow panelists with me. I think in order to make it easier, since we all see ourselves on this screen, we'll go around the clock with intros. So maybe I could start with asking Philip to give us a quick intro on who you are, what do you do, and what does your company do?
Sure, thanks, Martin. So I'm Philip Connell. I'm the Global Treasury Manager for the Body Shop International Limited, the ethical beauty brand founded in 1976 by Dame Anita Roddick. So I'm responsible for all front office operations, and I've been with the company for around 9 years. And during that time, I've held a number of different positions at the company in Treasury, within the front, middle, and back office functions within the Treasury team. And while at the Body Shop, I've been involved in a number of projects, including the setup of a payment factory, global banking tenders, cash pooling, in-house banking, intercompany financing, and TMS implementations. And I was AMCT qualified in 2019.
Very good. Thank you very much. On to Maha.
Thanks, Martin. I'm Maha Dimachki. I'm currently the Chief Payments Officer at Paydot UK. Paydot UK is the payment system processor and standard setter for retail payments in the UK. So this includes faster payments, which we all know, BACS, which is direct credit and direct debit, check clearing, check and image clearing, and related services. There's about 9 related services, such as current account switching, mobile payments, PayM, and others. And my responsibility is actually to run the payment operations. So across those 3 schemes, as well as the 9 managed services, which is a great gig, no doubt. And I've been in payments a long time, in and around payments most of my career. So, payments is one of those things that I really care about and I'm passionate about. But I will say also, I hugely admire all the companies that are sitting on this panel as well. I mean, whether it's the Body Shop, Save the Children, TransferMate, and so on. So it's really nice to be on this panel.
Fantastic. Thank you very much. I'm going around the clock to Tom.
Thanks, Martin. And yeah, echo Maha's point around the panel. It's great to be here to discuss some of the work we've been doing. So, I mean, I'll start off with the Bank of England. Many of you may be familiar, at least in name, in what we do. But we are obviously the UK central bank. We have many different roles under an umbrella of promoting financial stability and monetary policy. I won't go into those, but you'll be familiar with the distribution of cash banknotes, regulating banks, setting interest rates, that sort of thing. But what I'm here to talk about today, and the part of the bank I work in, is around our role in the UK's payment systems and running the infrastructure called the Real-Time Gross Settlement Service. Now, what is this? It's effectively a piece of infrastructure that holds sterling central bank money, but it's also used to settle the vast majority of UK payments. So many of the schemes that Maha mentioned with Paydot UK, as well as so the ATM network and some card networks, we actually settle the money through the Bank of England Central Bank, and that's done for financial stability reasons. The other thing we do is we actually operate the UK's high value payment system, CHAPS, which many of you will be very familiar with. And that altogether covers about £660 billion a day, so quite a lot. But the reason we're talking about today, and the reason it's sort of exciting, if you like, for this conference, is that we're actually rebuilding, we've been redesigning, and now we're beginning to go into the implementation phase of a brand new real-time gross settlement service. The reason we are building that is to bring better resilience, to modernize, to allow more innovation. But what's really important and interesting here is actually around the data that's going to be carried over the infrastructure. So the payments that we send and receive, we're going to be facilitating better data, more structured data, enriched data, and that really filters down to better services potentially being built off those, and an all-round better experience around data in payment systems, not just in the UK, but as part of a global effort to update. And I think I'll talk a bit more about that later. But in terms of my role, is I work on that programme. I'm responsible for a key aspect of the ISO 20022 migration, which is the new data standard, and principally responsible for the technical documentation down in the detail of actually taking the policy of better data and making it happen in the UK.
Fantastic, and no doubt we shall dive into some of those things during the session. Joanna.
Thank you, Martin. So my name is Joanna Fanthorpe. I'm a Treasury Manager at Save the Children International. I have been with the Save the Children for the last 6.5 years. My background is banking, corporate banking, and more specific, international cash management. So what do we do as an organization? So Save the Children International is the largest children charity after UNICEF. Last year we celebrated our 100th birthday. Save the Children International is a federation. It's made up of 30 fundraising national companies, and Save the Children International, where I work, is the humanitarian and programming service company. So 17 of those fundraising companies raise money for humanitarian and programming activities outside of the home countries. So these monies are deployed to help most marginalized and vulnerable children by Save the Children International. We operate globally. We operate in 65 countries. Those countries are not UK or Germany or France. They are most deprived third world countries, from Afghanistan in Asia to Somalia in Africa, or Yemen and Syria in Middle East. We have 500 bank accounts with 150 different banks, sometimes very small local banks in the countries that you never actually heard about. In London, we have 2 big cash management global banks, and we also partner with FX providers. So we've got about 15 FX providers in London for our foreign exchange. We fund 1.2 billion a year. We fund our country office twice a month, making approximately 130 payments a month. So I'm really looking forward to our conversation today, because we face few challenges within international payments, and that's why I would like to have a discussion with you guys. Thank you.
Thank you very much, Joanna. And last but definitely not least, Sinead.
Thank you, Martin, and congratulations, Joanna, for your 100th anniversary, first of all, that you celebrated last year. So I'm Sinead Fitzmaurice. I'm the CEO of TransferMate Global Payments. So TransferMate essentially is not a household name, because we power banks and software platforms underneath. So TransferMate is a globally regulated payment technology company, which improves speed, transparency, reconciliation for companies when moving money cross-border. TransferMate was founded in 2010 by Terry Clune, who's the founder of Clune Technology Group. And Clune Technology Group has a suite of financial services companies that make it easy for companies when they're trading abroad. For example, if one of our companies is a market leading in the VAT refund side, so we specialize in, procuring VAT refunds for the large multinationals across the world. So Terry saw very early on that the friction points of moving money around the world from the correspondent banking network presented unpredictability, quite a lot of friction points, when everybody on this call will I suppose, resonate with the fact that payments are delayed or go into the ether, and you actually can't see where they are. So what we did in 2010 was set about the arduous task of building the infrastructure first. So we now have payment licenses right across the world in all 50 states of the US, Canada, Australia, New Zealand, India, Switzerland, Europe, UK, Dubai, Mexico, Chile, Brazil, Argentina, into Singapore, and so on. And what we want to do is power partners such as banks, software platforms, and essentially be at the cutting edge of digitalizing the international payments. And to resonate with what you just spoke about, Joanna, like, I suppose the friction points of moving money around cross-border emulate from the fact that payments have to move through a pass-the-parcel chain of banks in the middle. So what TransferMate has done over the course of the last 10 years is essentially got regulated in each jurisdiction. We have a local bank account network in over 162 countries. So we cut out that correspondent banking network. What that means is our API infrastructure and the technology that we bring to our customers, the underlying customers who use us. And we talk about the partnership network, but the underlying customers of those partners enjoy, I suppose, the transparency and the reconcilement benefits that come with the infrastructure that we bring to bear with the partnership network. So we proudly support and power a lot of the payables, but not just the payables, but the receivables. So a lot of the payment industry have focused on payables. We have focused on both the payables and the receivables, because we're regulated in all those jurisdictions, to lift those cash flow friction points. If you're at the mercy of the correspondent banking network, and everybody on the panel will resonate with this, the unpredictability that presents doesn't accommodate the ability to reconcile back into the ERP system or the software platforms, and that's where we focus. We've garnered contracts and partners with the top banks around the world to actually bring a frictionless product to their underlying customers. So enhancing the customer journey completely with the infrastructure that bears to enhance the cash flow benefits that follow with pure transparency, reconcilement, and so on. It's just taken out the layered kind of, I suppose, correspondent banking network in the middle. So it's been a journey over the last 10 years, but we focused on the infrastructure first. We partner with leading banks around the world, leading software partners, and so on. And we're glad to be on this panel just to explore the friction points, and if we can embed our product into I suppose, handling those friction points into the future even more than what we've done already. I'm delighted to hear from Joanna and Maha as well in terms of the real life, I suppose, problems about moving money around the world. And TransferMate, as I said, was born from Technology Group, and Terry saw the friction points of moving money around the world, and we set about in the first banking crisis developing an infrastructure build that would accommodate B2B payments, but also connected back into their ERP systems and their books of primary entry, be that cloud accounting, ERP systems, or source to pay and source to settle.
Perfect. Thank you very much. I think we had, for an intro round already, like all the buzzwords that are around, right? And thank you for throwing API in, Sinead, because I didn't mention that in the beginning, but certainly there's all about friction, solving friction for our corporate clients. It's about transparency and speed, surely. And Tom, you spoke about the power of data we're trying to lift, which again, that will resonate with everyone on the panel, but also actually with our corporate treasury audience. I think to kick us off, or actually go and dive a little bit deeper on this, I would actually love to go and get, with the title of Chief Payments Officer of PayUK Maha, you are definitely the best to kick us off and just give us maybe sort of a brief glimpse of what you think is new and noteworthy from a PayUK perspective, really focusing on what our corporate audience are interested in, and then we'll dive deeper after that.
Very happy to, and I think with a diverse audience, I'll try to cover as much as is relevant. But payments is dynamic. It's a dynamic and evolving landscape, as we've just heard, actually, just through the intros of everybody on this panel. And if we look at where it was years ago, I mean, it's no longer a transfer of payment, a transfer of value from A to B. It's a lot more than that now. And if we see the innovation, the rise of fintech in and around payments, about 30% of fintech starts in and around payments, and we're seeing a lot of investors in the market really interested and valuing payments business, and there's a lot of M&A activity and partnerships and so on. So that they're clear indications that there's a lot of interest in this in this industry. And there's a few drivers that again are probably familiar to many of us in different ways. Technology obviously has been driving innovation in payments. It's about competition. It's about driving propositions that bring value to consumers, journeys that are frictionless. We just heard about frictionless, more integration, and more ways to know your customer and to be able to serve your customer better. We've also seen regulatory changes fueling competition and innovation in this space. So, I'll probably draw attention to things like open banking, which is kind of a journey, and it's moving towards more open finance as well. And that's kind of enabled non-banks to actually come into this space and innovate and find, interesting ways for their customers, retail and business customers, to pay. And of course, we can't move away from the fact that, we live our lives differently. The way we interact with financial transactions is changing, as consumers, and whether that's the Internet of Things, we can see that there's been a trend in decline in kind of the use of cash, or indeed, the global pandemic that we're living through now. And what we're seeing actually, the trends that we had previously, which have been kind of, happening at a slower pace through the pandemic, have accelerated. Now, cash, for example, has declined by about 60% at the beginning of the pandemic in the UK. It recovered slightly, but it hasn't gone back to its pre-pandemic levels. Checks, again, declined by about 50%. And at the moment, it's sitting at about a 30% decline based on what we're seeing. And again, we don't see that going back, and we see that continuing to decline. Yep. Faster payments, on the other hand, in terms of digital, that's gone up by about 17%. BACS has held steady. So there's a lot of digital transactions happening. And of course, we hear a lot about DLT, cryptocurrencies. A lot of that is changing the landscape and what's happening, and to what extent that's going to be accelerated would be interesting. But the key here that I'll just finish with is it's about innovation, which is great. Innovation we need it to fuel economic growth, particularly now. Propositions that bring value to business and retail consumers also need to be matched by frictionless journeys. Amazon talk about the abandonment rate, being a key thing for them. And where there's friction, the abandonment rate is quite high at the checkout. So that's a big thing. But also propositions where the payer and the payee, know more about the payments. So, what's its purpose? Who's involved in the payment? Who are the legal entities that are involved in the payments? What is it about? What's the remittance data that the payment can carry? And traceability. Where is it at the moment? Is it lost in the ether? And hopefully, I need to talk about, obviously, ISO 20022. We are a standard setter, so, we're hoping that with the implementation of ISO 20022, we can actually deliver on some of those things that I just mentioned: traceability, purpose, remittance, etc. But it does need collaboration across the industry, and this is why it's great to be part of this panel. To get it right, we need collaboration. So I'll stop there. I think that hopefully there's a lot to talk about, but that hopefully gives a good intro.
Yeah, it is, and it's a very good intro. I wanted to actually maybe do a quick detour. So there's a lot to work with here. I'm latching onto ISO, empty messages going the ISO way, etc. I think that's something that at ACT events has been talked about just a little bit in the past. But for me, it's a bit of an idea to say, okay, this is like for banks and infrastructures in general, right? I'm going to ask Tom a couple of things on this in a second. It's huge. But it's also, I think, a bit of, it's a bit difficult to understand why a corporate treasurer should care about this stuff, right? Other than there's better data, etc. But it feels like work. So maybe we'll actually do a quick detour and ask Tom, could you kindly explain just a little bit what this ISO migration thing actually is? And then maybe from your point of view, why it's relevant.
Sure, thanks Martin. And yeah, just building off what Maha said around sort of so many different things going on in the industry. And I think, you know, one of the key things around ISO 20022 is it's very much an enabler and something that we're going to enable benefits, which may take time to bed in. I think that's the important point, is that we are on a bit of a journey. In terms of what ISO 20022 is in itself, it's an international standard. It's a methodology. It's a data language which allows for the transmission of instructions or additional data to carry from A to B. And I think that goes back to a point that was made previously around payments isn't just about the movement of funds. Being able to carry more data, more intelligent data, is going to enable the way we view payments and what the role the actual payment messages themselves take. So that's what ISO 20022 effectively is. Now, what it actually means for us in the migration in the payments world, because it does exist outside the payments world, is that this is a global move towards this standard. So currently, the International Correspondent Banking Network, other operators around the world, ourselves included, currently use an MT standard, which is a proprietary standard. Moving to ISO 20022 internationally means that we're not just talking about better data in the UK, we're actually looking at better data internationally in other jurisdictions, but also across jurisdictions as well. In terms of what I mean by better data and more enhanced data, I mean, effectively, we're talking about a data standard which is to some degree future-proofed. We can add to how it carries data. It can actually be applied, although principally we're talking about a specific type of messaging technology, but it can actually be applied elsewhere in things like APIs. But effectively, we're talking about data which is enriched. So in our instance, for example, and globally, we're talking about adding more identifiers. It makes it much more easier to add identifiers to enrich the data message payload. So for example, in our case, we're adding the LEI, the legal entity identifier, to allow for better traceability of where payments come from and the different parties in a payment chain. It's also going to allow not just additional data, because it does allow a lot more data, and the actual payment messages themselves are much bigger. It allows for much more intelligent data. So for example, a lot of data which is historically often unstructured, with very little sort of coordination between what it might look like in one jurisdiction versus the next, we're actually going to see much more structured data carried over the payment. So addresses, for example, will be structured, so you can make much more sense of what addresses mean globally, where obviously addresses often mean different things in different jurisdictions. But also critically, remittance data is going to be structured. So we're moving to a world internationally with other operators where we're agreeing to use structured remittance data. So that means an individual piece of data, you're able to interpret exactly what that means, what that's referring to. Currently, a lot of remittance data is completely unstructured, so you have to have certain rules that describe, you know, what it means. So we're moving to this world. Now, just to come back to my previous point around, you know, this is going to be better for everyone and bedding in. Effectively, what we mean by that is, as we have enriched data globally, working with Paydot UK, working with correspondent banking networks such as SWIFT, and other central banks, including the ECB, those from North America to the Far East, we're actually moving to this data. So there's going to be a standardization internationally, which means not only are we able to have better data in the UK, and embedding into sort of products and services in the UK, we're going to have better data across border. And I think that's the really critical point, is that there's a network benefit in everyone moving to this standard, and by creating that network benefit, it will eventually begin to filter down into products and services for the end user. So it's not just something that happens in the middle.
Yeah, I think that's very cool, and bringing it to life. Thank you very much, Tom. Maybe just flipping that over to Philip here is like, I think conceptually we'll understand it, but you're sitting on the corporate treasury end of the world, right? How in real life is that going to make a difference for you? That's part one of the question. Part two, As always with these improvements, there seems to be some work that needs to happen, right? So are you expecting this to be like a big deal for you and your company? And if you think about your fellow treasurers or treasury folks on this call, what should you start thinking about that's going to come down the pike?
So I feel that this is a major change for corporates that really can't be underestimated or taken lightly. Many treasurers, I mean, to be honest, may not be fully aware of these changes at this current time, although they are already happening. I think they have been for a number of years now, and I think some are already active, like After Payments in the UK, and I think SEPA as well. But the main change I see for a corporate treasurer is around the main difference is around the MT1 messages and the MT9 messages, so that, you know, the 101s, 103s, 940s, 942s that we've all come to know and love will really disappear completely after 2025. But we don't have until 2025 to make the change. We've really got to do this sooner. I think as a corporate treasurer, we really need to start looking at where we could be impacted and engaging our providers. So like our banks, our ERPs, our treasury management system providers. And furthermore, we really need to internally gear up our key internal stakeholders. So people like IT or finance or financial shared services for these changes, because there is really quite a bit of business planning around this and allocating of resources and ensuring it's on the business roadmap. You don't want it to be a surprise to anyone. I think by starting early, a corporate can really try to minimize disruption internally, and potentially they could maximize the benefits of these ISO changes. But this is all really relevant to key stakeholder buy-in. You really need that key stakeholder buy-in to maximize those benefits. And this is a real opportunity to streamline, I think, maximize some of the straight-through processing, standardize, automate, reduce fees, reduce complexity, and increase controls in relation to areas such as payments. So in payments, I think, you know, it's already been touched on, but build it once and use it in many countries. I think there'll be less failures as well, as my understanding, because there'll be more information in the payment. So that should be easier. On statements and reconciliations, that should be simpler, because statements will be standardized. I know some parts of the world, I don't think you can get 940 sometimes. It can be difficult for some banks to provide that. And in terms of reconciliations, there'll be much more information on the statement. So that should allow greater straight-through processing there. And on the reporting side, a lot more information. So I think this is probably one of the few chances that a corporate treasurer really gets to start changing systems if they wanted to, and even banks, because it's always difficult to find the right time to do these things. And as this change is happening, you may as well look at this as a wider plan, is my opinion. I really feel that treasurers and corporate treasurers need to drive this change within their organizations. And this is a situation where Treasury can really have a real value added in this situation. You know, you can actually save money and improve and make some efficiencies. I think the level of change will really depend on how integrated that you are at this current time. So, I mean, if you're integrated into your ERPs or your TMSs, there could be some major developments required. So it could be around statements in terms of replacing 940s and 942s, and even the relevant payment files, just all requires planning and testing. But even if you're on your online banking platform, you still have to download statements and everything, right, and upload payments. So it still will affect you, but maybe not to the same extreme.
Yeah, I think that makes sense. And we were talking a bit about that earlier as well, right? So it depends on your level of integration. But as Tom was saying, you get more data, richer data in a better format. So there's maybe more things you can actually do with it and automate flows around it afterwards as well, right? Well, I have exactly. You, Philip. Maybe you can spend like a minute on sort of other things that you at the Body Shop are seeing in the payments space, like how you receive money, how you get paid, etc.
Sure. So I think just from a pure payment side, looking at things like payment on behalf of, receivable on behalf of, or in collections on behalf of, and potentially optimizing some of the virtual bank accounts. As a retailer, we also have the element of customers, as you were talking about, taking payments. I think that, you know, it's all about, from our perspective, trying to enhance the customer experience and the journey, and allowing the customer to really pay in the ways that they want to. Yeah. So, you know, there's a lot of different methods out there. I mean, Apple Pay, Android Pay, Alipay, Klarna, PayPal, Ideal. I think the list goes on, right? But it's about giving the customer the choice as much as possible. I think something that we've worked on heavily, and ultimately this will evolve. And potentially, in the future, we could be accepting digital currencies. I don't know. And I think virtual currencies are really picking up momentum potentially. And that's an interesting space to see as to what's going to happen in the future.
Very cool. We're getting a lot of questions in, so I'm gonna do a quick jump to Sinead to hop on the API before I go and ask Joanna a couple of things on your payments things. There's a lot of questions around, do we see APIs be adopted by clients, etc. Sinead, since you mentioned API in the beginning, can I sort of get your views on what's happening with APIs?
What we're seeing in the kind of movement towards digitalization, Martin, is that particularly with the COVID era, everybody wants information now. So within their ERP system or their procure-to-pay system, it's all about the rich data that is in that system. So if you have no payment data in that, you're kind of decoupled from the pulse of what's happening on your capital management, spend management, cash flow management, and so on. So a lot of what we're seeing with our partners is, can we API that your kind of infrastructure into the core embedded structures of the ERP system? And here's the challenge, right? So at the moment, if you do that with the traditional correspondent banking system, you're at the mercy of the money moving around the world. There's there's several layers in the critical path. If you can eliminate those layers in the critical path and embed that into the ERP system or the core system via API, and that's why people are asking, right? So at the moment in the COVID era, they're faced with very, very fast decisions, which no other company has been faced with heretofore. Like the supply chain management, not only have we seen cash flow restraints, but we've also seen where we've had surges of demand. So there's various kind of, I suppose, spectrums to the implications of COVID, but all of it means that they need their finger on the pulse to rich data in terms of money movement, and the money movement translates back into the cash flow. If you cannot translate that and embed that into the core system, the finance function is decoupled from the payments side. So that's why I kind of say the API, what we do is we API into the core systems, and we allow that kind of rich data to kind of, I suppose, give real-time functionality. So as we've said, we've established a payment network right across the world, local network of bank accounts that move the money. So we've taken out that correspondent banking network in the middle, which creates the friction. That's the problem. If you try and embed the current system into digitalization of the core EPR systems or the procure-to-pay or the settle-to-pay, if you don't have control over the critical part of the transaction, that's where it falls down. And that's what we've developed over the last 10 years. But I'd be interested to hear kind of, I suppose, the comments from the panelists. And I know Joanna, Philip, etc., you've all kind of been at the situation where a payment has gone missing and you're there for 3 weeks trying to trace it and so on and so forth. That's the bit that aggravates CFOs and treasurers. That's the bit that adds serious complexity and administration to the treasurer function. So if you can peel that back and embed that into their core system so they have real-time information on the payment flow, it has huge benefits. And I think COVID in particular has shone light on that, because the need for immediate information to adapt to the current environment, it's continuing and it's ever prevalent, and it's kind of accelerated, I suppose, the digital movement. That's been here for a while with the cloud environment, but I suppose marrying that with the corresponding banking network has been difficult, because you need to have that functionality and that pure transparency, that pure reconcilement. So if you're exporting to 20 countries around the world, you know, when is the money going to land? How does it reconcile back into your invoice? That's what a treasurer and a corporate CFO is looking for, to marry that with the cash flow requirements. So interested to kind of hear the real life situations from Philip and Joanna and so on, and I presume I resonate with the friction points that I say there in terms of managing the cash flow and trying to marry back, you know, that reconcilement back into your systems. That's where the issue lies, and that's why the fragmented, the moment SWIFT system is a messaging system, it's reliant on the correspondent banking network, and it has no touch point with the customer interface, which is reliant on each individual banking relationship. With us, what we've tried to do is develop a system that provides the messaging system, cuts out the corresponding banking network, so we're in the critical path, and then we have the API connected into the customer interface, which connects back into their ERP system for real-time rich information when they're managing their cash flow. And essentially that's where it boils back down to. You know, I suppose TransferMate has been built by Terry and myself, that we have that corporate accounting kind of background, that we know what we want from a balance sheet, and moving money can be very, very complex. So you need to be on the pulse of the receivables, but the payables. And when is it going to land? What's going to land? What's going to reconcile back into your system? You don't want a manual system where it's all kind of push buttons. So.
No, and that makes a lot of sense to me. My voice. Did you guys hear me? Okay.
Yep.
Okay, good. I had some weird echo. The beauty of being in a virtual panel, right? But what I wanted to say, so it resonates with me. API certainly hits the speed, accuracy need, and we've seen some of that. I'm not entirely convinced, like as a corporate channel, as an alternative for Philip and comrades to do, instead of, you know, Swift for corporates or host-to-host connectivity, etc. It's fully there yet, but it's certainly coming into the areas where you need speed and accuracy. Maybe Joanna, since we have been talking about sort of international payments, friction points, and all of that. Actually, maybe the first question, right? Because I like that a lot when Philip was saying it, right? There's a bit of a payer's sort of experience topic going on, right? That people want to pay the way they want to, and you have to give them all the options because you want to get paid, right? So I'm assuming that for a charity that would be the same. So kind of if you could expand on that quickly, and then maybe let's go and talk a bit about those friction points that you're trying to solve every day in moving money abroad.
Thank you, Martin. So yes, for Save the Children, I mean, we face few challenges. We already mentioned visibility, transferability, and for example, visibility is very, very important for us. We fund our country offices, and we want to also minimize the cash flows to those countries. We don't want to have massive balances in those countries. Therefore, the visibility of the bank accounts is key. So, for example, 18 months ago, we only had like 37% of bank reporting to our system. Currently, we've got 80%, and by the end of this year, we're looking to have visibility of 90% of our bank accounts across the globe. And some of these banks, or some of these accounts are in very exotic countries, and banks are not on a SWIFT. So we're working with our external partners, collaborating with external partners to help us to do it. And we're also very excited about the SWIFT GPI. To trace payment from beginning to end is also very important for us. It will help us efficiently track payments in transit, as well as also lifting correspondent fees. However, even though some local banks, the very small banks, are very sophisticated as those international banks here in London, there are some banks that are not on SWIFT, they are not on SWIFT GPI, and they will not be able to offer it very soon. But however, collaboration with those banks and our global partners is a key in order for them to understand what we require so we can work together. As I mentioned before, we operate in a very difficult jurisdictions, and in some of those countries, it's very difficult to talk about standards, innovations, and digitalizations. Even though, as I mentioned, some of them banks are very sophisticated, they are still facing different challenges. There could be government instability, there could be lack of liquidity in some countries, where the banks don't really want to release the funds to final beneficiaries. And there are political risks and so on. So in those markets, we need to collaborate with our either local banking partners or with our global partners, because we need to also think about how to improve and how to improve, for example, money, mobile money in Africa, or for example, in Somalia, where we only use cash transfers. How do we make those transfers in more secure and more efficient ways? So those are our challenges, and it's not easy. I know that we are a very difficult organization and not like others, but yes, we still need to make international payments, and we still rely on partners to make those payments in a secure and efficient and timely manners.
Yes, thank you. And I wouldn't call it a difficult organization, a purposeful organization that is obviously is doing things that are quite more difficult to achieve these days, right? And that's, I thought, it's actually a good level set of, you know, what's still happening across the board, the diversity of and sort of the level of, you know, digital or well, all of it is quite different, right? We have been getting a lot of questions, and I can't believe that I already have a bit of a clock warning flashing at me. The good thing is, in a virtual format, there's no one there to drag us off the stage, so I feel very empowered to kind of keep on going for a little bit. But let's see how that goes. We have gotten quite a few questions on standards, the XML standard, etc., and then a very special question whether the US are adopting the ISO standard as well. So maybe Tom, I can ask you to comment quite quickly on that one.
Yeah, on the US specifically question, yeah, like many other jurisdictions, the Fed and the TCH, they are migrating to ISO 2082. I believe for a number of reasons they have a slight delay compared to where we in the ECB are with SWIFT as well. But we'll be doing, they will be migrating. I think they're going to set something out later on in the year, although I can't speak for them.
Of course. And there's another question before we go to our fun closing the panel round. Just very quickly on 24/7 connectivity, real-time stuff. How's that versus traditional banking systems and sort of the flow? Maybe Maha, you want to do a quick comment on that?
Well, so, and Tom can weigh in on this as well. It depends on what you mean by the 24/7 connectivity. Certainly, with faster payments, there's an ability to, you know, process payments. As the name says, faster. We're also moving to the new payments architecture, which will deliver more instant payments. If you're meant on settlements, then that's probably where Tom can come in around settlement. I think with BACS, with direct debit and direct credit, there is, you know, cut-off times there, and that's the sort of thing that hopefully RT2 and the program there can deliver. So it depends on what that question actually was aiming at, but hopefully that's kind of a quick summary of those two. I would also like to quickly say, in terms of the ISO 2022, you know, that global standards is really the you know, the trend and the name of the game here, and so that collaboration cross country is so important. So I thought I'll sneak that in, given that we're out of time.
Very well done. I think the settlement aspect is not quite as important to our corporate clients as it is to us banks. Maybe I'll ping a quick one over to Philip. We are seeing some of the outcome of Brexit, as in, you know, SEPA payments or payments into the EU, etc. Or there's some funky stuff going on. Maybe you want to comment on that quickly.
Yeah, I think that's evolving, right? I think there are a few countries where that has happened, but it seems to be isolated. But that situation does seem to be evolving, and I would just suggest that you speak to your bank if you're affected to try and identify those countries or your vendors or whoever it is saying that to you.
Thank you, and that is I can say we have seen the same, right? It's a bit we are actually a bit we're monitoring it, we're seeing what's happening, we have some conversations, right? I'm sure it will settle down in a bit, but if you do go and see things that shouldn't happen, you could go and talk to your bank about it, right? And I think we'll have to expect to see a little bit of this confusion continue until things settle down. I cannot believe it. We're actually out of time. I have like so many other things I wanted to discuss with this panel. I'll have to apply for an extension next time. I'm being told I don't get an extension, so maybe we'll close this panel with a quick round of sort of fun statements that I'm going to throw at you guys. But if you could give me a one-sentence description of the 2021 payments landscape or your mood pertaining to the payments landscape, that would be great. I'm going to go counterclock this way and start with Sinead, actually.
I haven't actually thought about this, Martin, too much, but it has to be digitalization. It's and that's not fun, but it is fun because it will make our lives easier. So like digitalization, COVID era, everybody has applied the pressure on capital and cash flow funds and the need for more rich data. So like fun or not, it will end up in the fund if we achieve that in 2021. But that's my goal in 2021, so to speak. So
digital is always
carrying software platforms and banks, as you know, Martin. So just to bring value-added products to their underlying customers, so it becomes fun for their underlying customers. So I don't know. I can't make it any more fun than that.
It's definitely fun enough for me. Thank you very much. And Joanna, fun or not fun? Your one sentence on payments this year.
Oh, mine is not going to be fun. It's just going to be a statement. Maybe just because I think that payment landscapes, there will be always discrepancies between them because usually they are influenced by the local regulations and availability of payment technologies. And we cannot really talk about the same landscape because in UK or Somalia, there are completely different standards. Mm-hmm. Thank you.
And Tom?
Yeah, so perhaps also not a fun one, but I think, you know, for 2021 for us, it's a year of a little bit of planning, intense implementation and anticipation, because we go live in 2022. That's when we can start to see the benefits of migrating to the new data standard. So I'd say anticipation really is the key word, hopefully, when we get to that benefit. And just perhaps in response to a couple of other questions, it is the year of where we're starting to look at before the implementation, the banks. This is in some sense a reset of the way we use data in ISO 20022. So where there are perhaps a shortcomings of data using the MT and the correspondent banking network, I hope that's the case. So I would encourage you all, when the time's right, to speak to your payment service providers, talk to them about ISO 20022, and hopefully the bank can see as an enabler that'll begin to filter down. But anticipation for 2021, and then hopefully from 2022, we'll start seeing the benefits of ISO 20022.
Fantastic. Thank you, Tom. And Maha?
For me, it's collaboration, innovation, and better outcomes for consumers. And I would like to leave my house and sit in a cafe with all of you and have a coffee and pay, even with cash, in a cafe. That would be my aspiration for 2021.
You've got a deal.
You definitely have a deal. Perfect. Philip, you get the final comment.
So I think for me it's challenging but exciting, but I also think it's a year of planning.
Very good. Philip also gets the prize for actually having one sentence for the one sentence answer, but I'll definitely take the coffee, cash or no cash. I wanted to thank the audience for listening to us. I definitely want to thank this group of fantastic group of panelists for spending this time with me and with us on this fantastic topic. As I said, this session has been recorded. I hope that has worked. So this session, all the other sessions can be watched later on for the next 14 days. And that does conclude this session. Thank you very much, everyone, and hope to see you soon in person.
Thank you, Martin.
Thank you.